The session shall be moderated by Anil Kumar Gupta, Partner Digital Finance Services, Microsafe Consulting. Okay, I'll call them. Yeah. The panelists include Shalini Gupta, Head Strategy, Sahmati. Ma'am, please come up on stage. Rishikesh Mehta, CEO, Credol. Manish Bhatia, President, Lending Card. Nikhil K, Co-founder and CEO, Vinakin Analytics. We look forward to an insightful discussion. With this, I hand over the charge to the session to Anil Kumar Gupta, sir.
I don't know. Do we really need mic, considering the crowd that we have? Or like, would you mind coming forward and? Okay, yeah. I think it's difficult to do a session immediately after lunch. People are still busy with the lunch, and I think I see that there was a trickle down impact of morning sessions, and slowly it started eating into the next sessions, and finally where we are. But still, I welcome you all into this session, and this will be very interesting session considering the panelists that we have. Before I start, let me start with few words. Actually, probably instead of discussing everything around digital public infrastructure, we will restrict it to credit. And if you really look at the credit in India, since morning we have been hearing and talking about that the kind of credit gap that we see in India. And despite so many policy pushes and enablement, we continue to see the gap. And this gap is very, very large in the sense like there are different estimates which talk about 400 to 600 billion dollars of gap in credit in India. And this is all across the sector in the sense we are talking about the retail, we are talking about small enterprises, we are talking about agriculture. And if we see that this where it is heading, so probably we are this credit gap is going to increase over a period of time, as we see that credit demand is increasing even in the retail sector where it is growing by about 16 to 70%, and there's a lot of demand for home loans. So you can see that there'll be more pressure on the credit providing institutions. Similarly, we see a credit demand even in agriculture, which is showing sign of resilience during the COVID and beyond COVID period. So this becomes very important considering that as a country we aspire to become a $5 trillion country, and credit becomes an enabling factor because this becomes a factor of production eventually. Uh, and when we talk about credit, it becomes much more complex when I start dividing this across the segments. Say for example, we are talking about a segment which is 120 million small farm holders, which are out of 140 million farmers that we have in India. 140 million migrant workers which are there in different states, and they are migrating from within the state or outside the state. Many of them, they are looking for the credit. There's a huge workforce that we employ now, which is more like a gig workers, and it has been increasing year after year. Then we also have about 50 to 60 million of small enterprises out of a 63, 64 million of total enterprises that we have. So all of them, they are looking for this scarce product, what we are calling credit. Very surprisingly, we have been having alternate lending setup or startups in India. More than 600, 700 such organizations they exist, and the data suggests that because of that, credit increased from about $530 million in 2018 to about $1.7 billion in 2020. So it was a threefold increase. But still, we still see there's a huge gap. In fact, Reserve Bank of India, very interestingly, they came out with a data point way back in 2020. It's little dated, but it says that out of 666 billion that they disbursed, only 2% of that was done digitally. So, probably, I think this sets a background that what is that we should have. So I think this says very clearly that we should have something like a digital public infrastructure and digital public goods. They can create digital pathways to the suppliers of credit so that credit is available to the masses in a democratic way. Sounds a bit futuristic, but perhaps we have the right panel to unpack that and to understand that better. Before I go to the panel, I just want to stress on one more thing. What is that? There is a very interesting report which came out from Morgan Stanley in October 22, which says that this is India's decade. And they very clearly mentioned that India's tech will take India from a prepaid economy to the postpaid economy. And if you look at a high level, what is that we are looking at the stack? So basically three layers, three core layers. One is that what we are calling it spend or payments. So we see enormous growth in payments thanks to UPI and other payment instruments that we have in India. Second is all about land or credit. That is what we are going to discuss today. And third is all about protection or the insurance. So I think that's a separate subject, probably will not be touching here. Though, like using account aggregator, I know that something of this sort can also be done. So with that, actually, I'll not take much time and talk about what is account aggregator and OCEN are. I would rather request experts to speak and share that with you. So first, let me go to Rishi. So Rishi, actually, why Rishi? Because we are mostly going to talk about OCEN. OCEN stands for Open Credit Enablement Network. This has various components, and like I think some of you would know it, some of you will find it probably it's new to you. So I think it's better, Rishi, that you unpack that. What is LSP? What is lender? And what are the various components? And as you speak about that, I think you also need to talk about that. How can it democratize credit? Just one example, probably before you go, because we see GEM as Sahai as one of the applications which is live on OCEN network, and it does very interesting thing. And if some of you are tracking some of the data, what I hear from there is that it has done as low as 160 rupees to 1 million rupees, which is about $2 to something like $12,500. So this is a remarkable thing actually. So no credit platform might have done such a low value to such a high value. It's such a long range. And secondly, of course, it's still early days. Something like 4,000 loans probably that it has done. Something like 16 crore is or 160 million rupees is what has already flown through it. But I think this at least provides us some rail, some pathways that where are we heading. So over to you, Rishi.
Thanks. So look, I'm going to try to limit my answer to let Shalini say her piece about account aggregator, and I think you can hear the lender's experience from Manish. But look, before we get into what OCEN is, it's probably better to frame what the problem was, right? And the problem was that small ticket lending didn't happen because if it was happening manually, it was not economically viable for the lenders to actually chase that business, right? So if you're giving a 2,000 rupee loan, for example, and you need someone to go send to go get the documents, evaluate them, underwrite, and then go disburse the cash. And in an extreme example, assume that's all manual. That would cost like 5,000 to 6,000 rupees. So how would it make sense for a lender to give a 2,000 rupee loan for 2 months at even 15%, right? So the idea was, how can you make this completely digital? Can you reduce the costs of that acquisition and the processing to so low that it made like a 500 rupee loan, accessible? So what we ended up doing is we created this protagonist, and those who follow iSpirit would probably know this. It's a fictional character rooted in reality. Her name is Rajni. She's a vegetable vendor in a small village in India. She needs a loan at 500 rupees at 9 in the morning and should be able to pay it back by 5 in the evening. She has access to the internet and the smartphone. So that's the protagonist, and she should get that credit at bank rates, right? Not pay 6% or 10% a day that they pay today. So now how do you enable that, right? So I think you get a lot of OCEN is solving the problems is actually only the last layer in maybe 4 layers or 3 layers that came before it. So look, how do you solve the, knowing the identity of the person remotely problem? Aadhaar does that for you. How do you solve this issue of sending money up and down at no cost? UPI does that for you. And the final thing is, look, documents are data, right? And what account aggregator does, and I'll let Shalini talk more about that, but what account aggregator does is effectively digitalize that data at a national scale. So we've started with bank statements. There's going to be more data sets coming through, but bank statements are what is needed at the end of the day to underwrite. And if you can get it at a few clicks and at a few rupees in cost, that's a lot better than spending 2,000 or 3,000 rupees just to get that data to be able to underwrite. Now, coming to what OCEN does, right? The other problem is, look, while the RBI guidelines are very clear on how not underwriting, but how what the process should be, what the requirements are, the market has evolved into becoming non-standard, especially in the digital space, right? So each lender will have its own requirements to integrate, as will the front-end apps, whether it's the Amazons of the world or Swiggy or Pesa Bazaar or what have you, right? So what all we are doing is standardizing that API, those APIs, and standardizing the process, which is regulatory compliant. So what happens then is if you need to embed credit in 2,000 apps in the future, you don't have to go through the pain of integrating with each one differently. It's all standardized. And the other thing that we are going to build is what we call a gateway, where you can plug in, and when you plug, like say a lender plugs into the gateway, all those front-end apps become immediately available, and vice versa. So what happens is you'll be able to embed apps, like embed credit anywhere for multiple use cases. So like Anil said, we started with Gem Sahay. So the other thing is, why do we build reference implementations in this space, right? So just look back to UPI. Nobody knew what to do with it. So we created these digital rails. Now what do you do with it? So Bheem was built just to show what was possible, that you could send 1 rupee, you could send it instantly, and all you needed was your debit card PIN, and okay, now there's a UPI PIN, but at that time debit card PIN and your phone number. So we built Gem Sahay, and what that is for the people who don't know, the government e-marketplace, it's where all public sector companies are supposed to go and source their goods in a reverse blind bid. And we have sole proprietors on there and non-sole proprietors as well, but we are focusing on sole proprietors because they're the unsolved for. So large corporations get credit, retail salaried individuals get credit, as some of you probably know when you get bombarded with calls. But the MSMEs, nobody gives credit, or well, lending card does, but they still, it's not as saturated as maybe some of the other segments are, and that is where the runway to grow is. So what we did was Gem Sahay for sole props. You actually created a reference use case for people to understand what we're trying to do, and what that is reduce the cost of delivery so that the 160 rupee loan is possible. And it is possible to disburse completely remotely and in less than 10 minutes from the start of the user journey. So one of the best anecdotes that I got from one of the lenders, I'll name them Tata Capital, they said, look, why this is useful to us. And the numbers are small, like 16 crores, most large lenders will do at lunchtime on a regular weekday, right? Maybe in one branch. But what is good about this is that Tata Capital has been able to disburse loans in the Andaman and Nicobar Islands, and he said we had never any plans to open a branch over there. So what you've done is suddenly provided access to the whole country. Yes, it's only the beginning. So we've just sort of pushed open the door a little bit, but it now gives the realization that you can lend anywhere in the country without really being there. Right, so that is what the goal is, and then the second one which is coming is being built with SIDBI for invoice financing called SIDBI GST Sahay, and then after that we'll open it up, to the market. You'll have, we're already working on a milk receipt financing product where dairy farmers will get credit. People are talking about rural microcredit. We even got a request like, can you figure out buffalo financing? And we're like, why not? So in this public goods setting, even if it's a low probability endeavor, we will still try because that's our job, right? And usually or not, you have enough time. Like we are not under the pressure of a profit-driven, organization to meet a certain target, to meet a certain target. So what happens is we can spend the time to research and discover whether it works or not. So in the next year or two, it should get more popular, and we hope it will scale. We don't measure our success by the value of the loans, but the number of them that we send out, because if you're sending more and more loans out to unique individuals, that means you're finally succeeding at what we set out to do. So I'll stop there.
So thanks, Rishi, actually, for sharing the details. I think a couple of more things probably you need to spend some time on, that what exactly is the loan service provider and technology service provider in the context of OCEN. Because it's a evolving concept, so I think it makes sense for the audience to better understand that.
Sure. So look, there are two main players in this, right? So we see like what has happened over the last 20 years is that lenders are building their own digital flows as digital has become um, more well permeated in the country. But what you also realize is the larger the org gets, the more difficult it is to be better and better at UI and front end. And what we find is the emerging startups and fintechs and what we call the front end guys tend to be better at UI, better at customer facing applications. And look, there are pockets of lenders who are also good at that, but like by and large, that is the experience. So the way you think about it, and someone, you brought up insurance, and I'll come to that in a second. But you have the product manufacturer, which is the lender, right? So they build or you create the lending product. At the other end, you have like even take any payment app, right? Say Google Pay, Phone Pay, Bharat Pay, millions of users transacting there. The question is how do you bridge the gap between the two? Because some of those guys are looking for credit. So what you actually do is the Google Pay or Phone Pay of the world becomes the loan service provider. So they're the customer facing application, and the lender is one of the manufacturers who provides options. So typically, say you're on Google Pay and okay, you've run out of cash in your bank, and you could see a day where you say, "Oh, I'm looking for 10,000 rupees." You could click, with a few clicks, submit your bank statement data via account aggregator. Your bureau data will get pulled at the back end by the lender. You will see an offer in maybe 10 seconds, or multiple offers from various participating lenders, and then you would go through the KYC. There are these like steps that you need to do, including provide your disbursal account, sign an agreement, set up an ENACH to repay, and like literally 5 or 6 minutes later, the money will be in your account. So you could see a day where Uber tomorrow could be an LSP, and an Uber driver who's probably run out of cash but needs money to fill his tank. You could do an end use control, pay the gas station to top up his LNG, and he can still go and run his business and earn money to keep the cycle going. You could see that with these dairy farmers who need credit, or maybe even to expand their business and buy another, a cow or what have you. So the whole idea is you should be able to embed credit wherever people are transacting and not. And look, some of the current loan aggregators may have an issue with this because obviously it becomes competition to them. But our usual response to that is, look, if the problem had been solved, then we wouldn't need to do this in the first place, right? So that India is large, it's complex, and there's room for everyone. So what we will do is go down the path where previously people maybe didn't want to go and forge a path for new products and to embed them in almost every place that you could transact. So think of like, Amazon already does it to some extent where you can get a loan on checkout, but it's not necessary that you get loans on IndiaMart where you're transacting on a B2B basis. GEM is just started getting loans; it was never available before. GST Sahay, so you could do a GST invoice financing product, in fact, on any app, because it doesn't have to be only with SIDBI; it doesn't have to be with the lender. So in fact, we had talked to IndiaMart, and they were like, "Yeah, we'd happily do that because people need GST financing because they're all B2B businesses." So think of LSP as the distribution, think of lenders as the product manufacturers. And I guess the best example, right, is probably the shampoo story of Hindustan Lever, where they did stop selling like the 5-liter shampoos and actually did a 1 rupee shampoo and distributed at every kirana shop possible. And that is how we would think about that can it go into every possible digital pocket in the country, and that's how you make access possible. So just to extend to that, there's also a thought bubbling up that you could do this for investments and insurance.
So thanks. Actually, you raise very interesting points. First point was all about this cost of acquisition. I think this is something what India Stack has really helped. So some of our studies suggest that even for the account opening, people are spending about say 300 to 400 rupees, and it just came down to less than 25 rupees, and probably right now it may be less than 10 rupees. So I think that is the one reason why like most of the banks are able to scale, or they are able to get so many accounts. So we will see similar thing happening over there. We are seeing similar thing happening in the stock, at least in the stock market, where demat accounts have opened. So that is very interesting welcome change. Second is that when you spoke about the example of Tata Capital giving loan in Andaman, so this also reminds me that probably lenders can diversify their portfolio, because right now they are there physically or in some or other form. So hence their portfolio is also concentrated. So probably this OCAN can help them diversify their portfolio and probably statistically reduce the risk in their entire portfolio. So thank you for that. And I think you also spoke about account aggregator. We have an expert, Shalini, from the account aggregator side. And again, account aggregator is not one single thing. It has been in making for more than 5 years. It has taken a lot of time before we finally could see first account aggregator officially in India. There are many things which happen around account aggregator, which is about financial information user, financial information provider, technology service provider, so many things all around it. I think Shalini, you would like to unpack that and share that the role that it plays in the overall open credit enablement ecosystem.
Sure. Yeah, so thanks, Anil. Yeah, so I would like to say that account aggregator has arrived. It's not the future. So that's one correction I would like to make. So like Rushi has already explained that, there are different layers in any digital lending, which starts from identity, there is a payments layer, and then there is a data layer. And then we have these apps, specific specialized apps like OCAN enabled apps, and ONDC is another one which is in the making. So these are the four components here. So out of which, while OCAN, I'll start with, first explaining the difference between OCAN and account aggregator. They work together, but they are different, because this is a question which we get very often, as to, can account aggregator work without OCAN? Can OCAN work without account aggregator? So the way it works is OCAN is end-to-end, standardization of lending APIs, which help the LSPs interact with the customers and the lenders through standard, communication. It runs across the entire lending value chain, and one part of it is around data sharing, right? So as a lender, there are multiple steps to any application, which starts with the application process, a bureau check, data collection, then running BREs in the backend, setting up a UPI mandate, doing KYC. So these are 7 or 8, like, let's say, the broader steps which a lender needs to complete before making a lending decision, out of which there is one, particular module which is around data sharing, which is where account aggregator comes and enables digitization, right? So traditionally, the way, our data is lying with financial institutions, we all know that on an average, if there's a customer who has one bank account and one insurance policy, one pension account, he is a GST taxpayer. So his data is lying in different units, and if he's transacting on UPI, there is a lot of transaction data, which is rich transaction data, which is being captured in the bank statement. So, and if he tomorrow goes to a lender and he says, I want credit, so the lender says that, unless you have a credit history, very difficult for me to lend, because you're a thin file. But I, as a customer, know that I have been a disciplined customer. I have been, paying premium on my insurance policy. There are UPI transactions in my bank account. Maybe tomorrow, I can say that I have my telecom bills, which I've been paying on time for the last 3 years. So for me, the challenge is, how do I collect that data and give it to the lender? And for the lender, it is a challenge to collect that data at a cost which makes it viable for them to lend. So that's where, account aggregator comes in. Another difference is account aggregator is not just limited to lending. So, it is cross-sectoral. The use cases are much beyond lending in all, as of now, it has been open to the financial sector. But going forward, it could be telecom, it could be health, it could be education. So everywhere, anywhere, wherever you need a data sharing process, which is, I'll come to, again, the basic principles here, where you need a data sharing process which is digital and safe for the citizen, and makes it viable for the financial service providers to operate in certain segments. That's where account aggregator comes in. In terms of, the principles of account aggregator, there are two basic principles. The one is, it starts with saying that the data belongs to the citizen, right? So anywhere that data is lying, it is a citizen's data. He is the data principal. So he, in his right, should have a channel or a mechanism to share the data, right? Wherever he needs to share the data for availing favorable services. And that's where, account aggregator as consent managers have been introduced by Reserve Bank of India, and they came out of joint deliberations of all four financial sector regulators, saying we will have an entity whose core mission or work or objective will be to only work as a consent manager for the citizen. So the customer is protected. Any data which is being shared is shared with his explicit consent in a framework which is again been laid down by MIT, which is a explicit consent framework where you will see that what is the purpose for which the data is being shared, for what period is it being shared, who is accessing the data, for how long will the data be processed. So you see all of that, and unlike the traditional system where there's a TNC in which there's a hidden consent, you will see the consent on the screen. This consent will be recorded, and a record will be available both with the FIU and FIP, and I'll explain FIP and FIU also. So one, you're protecting the consumer. Second, you're giving them a digital channel. The moment gives a consent, the data flows on a real-time basis from the source financial institution to the potential user of that data, which is again a financial institution to start with. So this is what we expect should open up, open finance in the country. In fact, India as a country, we are far ahead. We are thinking of open finance, where many countries are still at open banking. So the idea is to say, can cross-sectoral data within the financial sector and the tax data to start with. So GST has already started their work, on onboarding account aggregator. So if can that be made available to the citizen through account aggregator to any potential financial institution. Currently, it is as a user, the entities have to be, entities regulated and registered with one of the four financial sector regulators. So what you've done is suddenly, made the process of data sharing friction free. And the second biggest benefit it has provided to the market players is that the data is fraud free, as in there is no scope of any tampering of that data. It is directly flowing from the source to the user. In fact, banks have reported that earlier bank statement related fraud rates, which were in the range of up to 4 to 5%, that has come down to zero, nil. And some lenders have also said that we are also kind of thinking that your account aggregator has to be promoted as a preferred channel for data sharing, and we're even willing to give a processing fee discount to the consumers. So that's where we see the benefit should ultimately flow in, both for the citizen as well as for the lenders. And I would stop here and hand it over back to Anil, because it can be a long story.
So thanks. I think it's a very interesting story that how data potentially can flow from one institution to the other institution, and how it can be used in a regulated and in a safe manner. I think we also have Nikhil, who is the co-founder of Finarkin, and we have heard both Rishi and Shalini talk about OCAN and account aggregator. I think we go to the next level where we need to use the data. So I think let's ask Nikhil, and please help us understand that how will you pull the data and make that usable for low value credit, and that is where you very specialized do as very specialized work as a technology service provider. I think we'll be happy to know more about what exactly you do that.
Sure. Thank you. Thank you, everyone, for joining after a good lunch, I hope. So, before we dive into what sort of Finarkin does, and why there is a concept of a technology service provider, very quickly, I want to touch on digital public infrastructure. And regardless of the thought process that goes into why we require digital public infrastructure, let's try to evaluate the end outcomes, right? The end results. So common examples we have, which today already exists in India as digital public infrastructure, is our identity layer, which is say Aadhaar, right? Or the payments layer, the entire switch of offerings that NPCI has around IMPS, UPI, and so on, right? What these digital public infrastructure fundamentally did was value which would have otherwise accrued in a closed loop for some entities, right? Like the payments example would be a Visa or a MasterCard, right? That value fundamentally gets dispersed and distributed directly to the end consumers, like you and me here, right? So that's what digital public infrastructure does. It facilitates value directly, being accrued and dispersed to end users as opposed to, say, intermediaries. But at the same time, if you look at systems globally which are complex in nature and multi-party in nature, and again, payments is a good example. The concept of interchange, or an MDR is pretty much how things flow and scale really well. So that's, setting the groundwork for the data led digital public infrastructure that is coming in India. And it's not just the account aggregator framework bringing financial data. We also have the Ayushman Bharat digital health mission. On the health side, we also have the open commerce initiative around, ONDC and the Beacon Foundation. So India has a lot of these small experiments, which are now obviously starting to scale up and probably moving past the experimentation stage, coming through as digital public infrastructure, right? And this century, or this decade is going to be very exciting from that sense, that we are frankly in uncharted territories. There are no global examples, which have progressed to this stage, and with this sort of data availability, right? So with that in mind, let me very quickly sort of touch on what Finarkin does. So when you have these open protocols, they are essentially blueprints, right? API specifications or standards for how data should be published and consumed. Somebody at the manufacturer of these financial products and services, or distributors or users, still needs to publish this data where relevant in a defined, well-defined manner in a reasonable amount of time, and with good accuracy and performance. And equally, on the other end, entities who want to use this data, which are termed as information users, need to actually have the means to obviously request for this data in a manner the protocol or the blueprint specifies, and b, subsequently, once you're getting that data, the means to actually process that data, and go from raw data to structured, meaningful, derived insights, to ultimately, say, make a credit decision, or a insurance underwriting decision, or some sort of dispersal, or a financial product servicing, right? So with all of this in mind, the financial regulated entities today needed new capabilities. And what this framework did was, historically also, you had financial data available, you had bank statements, right? But here you also have a concept of a recurring consent. And what that means is, you almost get longitudinal records about consumers and businesses. So two things fundamentally change with data driven digital public infrastructure. One is the cost to acquire and process financial data, health data, commerce data drastically comes down, right? Because it's no longer, say, a proprietary data formats like a PDF or something, but open formats, right? And two, once this has happened, you also have this longitudinal, almost time series as kind of data available. So therefore, the kind of use cases that can be built around this are fairly more nuanced and more complex. And unlike payments, where it's a fairly narrow goods, or exchange of money for some goods and services, right? Here, the possibility of what can be done with data is fairly more infinite in nature. And so that's where a role of a technology service provider comes in, where companies like us and many other facilitate organizations to publish and consume data on such protocols, right? So we today work with more than 20 enterprises, including some of the major leading Indian enterprises. And yeah, so what we are doing is two-step. One is, of course, we are helping them become information providers and building the pipes for them to share data. And two, of course, nobody who has this data as a manufacturer really wants to share this data. But due to the nature of the system and the concept of reciprocity, entities who want to use data are expected to share data. So with that in mind, there needs to be a very business outcome driven use case and utility, and that's where we excel. We try to work with insurers, lenders, small finance banks, and of course lenders to understand that given this sort of data and sort of process flow you have today, how can we either bring you new customers and help you underwrite or understand them better, so that subsequently you're in a position to apply either your existing credit risk policies or build completely new ones for these for this kind of data sets, right? Or of course, the other point where it makes sense is today when you're servicing any sort of financial product, say you're making an insurance policy claim, or you're paying back your EMI, or any sort of servicing that's happening around this financial product, that also sometimes requires some sort of data from you today. So that's the other area where we play a role, and where we see a lot of use cases. So that's a quick overview of what we do.
Thanks, Nikhil. So I think we covered the whole 9 yard in the sense like what's the open API based or standard protocol based network is, how is basically fitting into that overall network. Then we also heard Nikhil talking about how do you pull out data from there, and like how it moves from say one entity to the other entity in a secure, safe and secure manner. I think ultimately it has to be used. So we have Manish from Lending Card. So I think let's hear from him that let what do you think is working for digital lending, and do you think that DPIs are already making an impact? And this is very important question from the perspective of how usable all these things are.
Well, good afternoon, everyone. So very quickly, Lending Card has been one of the early adopters from Account Aggregator, and we worked with Shalini and her team, I think since the last 2 to 3 years. It's been obviously quite painful, to get to this point, but I think we are actually seeing the fruits of it now. And to give you a quick lay of the land, right? So we basically, account aggregator is a consent-based architecture, and overall we've so far gotten about 2.3 lakh consents from the account aggregating infrastructure for our customers, and we've been able to disperse more than 1,000 crores using account aggregator. Very similarly, we've been one of the early adopters for OKIN. Worked very, very closely with Rushil. And overall, we've dispersed loans, which is 2,000 rupees to maximum of 2.3 lakhs. So, the segment that Rushi was actually talking about, is real. So overall, I think what we've really seen, with this public infrastructure is it is letting organizations actually innovate on the strengths that they actually bring to the table. So instead of us worrying about integrating with various different banks, because Lending Card is a digital lender, and data is where we go to make sure that we are able to underwrite and become better year over year, right? And how do we get that data? So obviously we get a lot of thin fine customers. Bureau is one input. Bank accounts is the other input. Obviously looking forward to other FIPs coming onto account aggregator, right? From GST to insurances, so that overall if we can get this consolidated information from this one framework, our ability to underwrite and actually serve the customers even becomes gets to the next level. So just to answer your question, Anil, when it comes to impact, we've seen real impact. The conversions, we've just started with OKIN, but what we are seeing with account aggregator is our conversions is at least 5 to 6% more than a customer actually uploading their bank statements. So the overall experience is better. The trust factor also comes into play, right? So where customers are much more willing to trust a middleware that they understand is able to sort of take the right consent and overall manage the infrastructure when it comes to who to share, what to share, and how much to share. So all those things have been taken care of. So I think from a lender's perspective, we don't have to go out and build things that have already been built by the public infrastructure. What we would really focus on is extending our reach, and our ability to sort of reach out to customers that we were not able to reach out to, build a kick-ass underwriting engine, ability to sort of collect that information and do collections on top of that, and overall serve our customers better. So that's what we've seen, and we've seen real impact on the ground.
Thanks, Manish. It's great to hear that how DPZs are trying to change the entire credit landscape in India. I think let's move to the next part of this session. It will be little difficult because first part we were trying to understand and explore that what's possible. I think various segments they face challenges in accessing and receiving credit. This is a little bit of understatement. And TPZs, they are trying to bridge that gap. This is what we heard from all the panelists here. But is that enough, or do we face so many other challenges? Let's try to understand this better in this part of the conversation. We also know that suppliers face several challenges in terms of higher acquisition cost and inability of the borrowers to supply the right document that they want. Similarly, from the demand side, people in the small enterprises, they face challenges because the kind of data or the kind of document that they have, and they also find that many of the processes of many of the financial institutions, they are very difficult to comply with. Unfortunately, if you look at the large Indian banking system, it is heavily skewed towards large enterprises, and that is where we see a lot of action and all other things happening over there. We have shadow banks, we have government-sponsored financiers such as SIDBI and rural banks. Still, small businesses, they continue to face challenges in accessing credit. And most of them and other segments like say small farmers, they have to manage through informal sources. And that is one of the reasons why we continue to face so many challenges in across different sectors. There was a very interesting scheme which was launched and which is known as PSB loans in 59 minutes, and it tried to address some of the gap, but I think we are still to see much traction over there. Couple of reasons they are cited. One is that the abilities of the banks not to take much risk. I think this banks are supposed to take the risk, but it seems that this itself is a question. And there was a lot of delays. So generally, like when you're dealing with the businesses, they need money at the right point of time. They cannot wait forever, or else they have to go to the other sources of the credit. Looking at some of these, let me again start with Rishi. Do you see that open is panacea for all the woes that
So-
most such
No,
borrowers
no,
are
no, no,
facing?
it's a fair question. So, look, laying digital rails is not the end of the story, right? So, I didn't talk about all the other things that we do in the background. So, I'll touch upon three things. Two are short-term things that we're already fixing. One is a much longer term thing, and like probably policy regulator involvement will be required. But look, the first thing is to make like an ecosystem like this work. We are disbursing loans. I mean, you could almost call it real time if it's just 10 minutes, right? The reporting cycle to the credit bureaus is still 3 weeks to 45 days. Yes, some lenders are submitting it faster, but this creates like a month-long gap where someone, like some borrower could go over leverage themselves. That poses a risk to the lenders who are lending to that borrower. So, look, there are two ways to possibly solve this. One, there's been talk of a public credit registry which will be real time. I mean, in all honesty, we don't know where that is. So, what I actually did was just reached out to the 4 credit bureaus, and we have started the implementation of real time reporting with 4 lenders with 1 credit bureau. Hopefully, the others will come to the party. We created a standard with all 4 credit bureaus together. So that's the first piece, to make an ecosystem like of small ticket loans disbursed in real time possible. And real time reporting includes disbursal of the loan, repayment of the loan, and closure of the loan. Right? You can't just report it and not the disbursal, but you need to have whether it's in default, it's 1 day overdue, 5 days overdue, and even closed in a timely manner. So that's one. The second thing is to touch upon this. Yes, lenders don't want to take risk in new segments. That is true. So typically what happens is, one is if you reduce the ticket size, which is what we're trying to do with Oken, the cost of the mistake is small, right? I'm not giving a 5 crore loan to a first-time guy. I'm giving like a 1,000 rupee or 2,000 rupee loan. I can maybe afford to lose that money. Obviously, not if all the loans go bad, but you can give slightly higher NPAs because the absolute value is small. But what we are doing actually with the CGT MSE is trying to craft a credit guarantee scheme for short-term loans, which, like, today even the scheme, that's an annualized rate, working capital loans, 1%. So even the pricing is not conducive to a 3-month, 6-month loan. And what this will be is a time-bound credit guarantee. So it's not like you give a credit guarantee for some segment and the lender can use that credit guarantee for forever after that. It's probably going to be like 1 year, enough time for a lender to experiment, discover a credit policy, and then basically the credit policy gets removed for that use case, and the assumption is either they've discovered that this segment works for them and they continue, or they discover they don't and someone else can try. So a credit guarantee scheme, you're going to start with SIDBI GST Sahay and then extend it to all the use cases. So that provides a safety net to the lender to at least try. So you'll get 75% cover. The other thing which is in the works, it's very, very early, is a possible interest subvention. So for first-time borrowers, you provide some break on the interest rate. So at least affordability is more for that first-time borrower, and then they can start the cycle. The other thing, so I said 3, actually there are 4. This is a much longer term thing, but if we can create like a data sandbox for loans that are given in an anonymized, aggregated fashion and make it available to lenders, you're learning from like sort of the collective wisdom or the collective mistakes as opposed to a lender learning from their own mistakes. It's sort of what a credit bureau does today just for credit data. We are saying, can you amalgamate all the data, application data, offer data, and credit data? So it teaches propensity for which products are working. What was the data at the time of application? How did that turn out in repayment? This is a lot more ambitious thing, but it potentially will happen maybe in the foreseeable future, but after like a few years. The other one, which is a pressing need, and is KYC, right? And I'll just explain why I say that. Look, the market is always dynamic. Regulations tend to be static, and there's always a gap as more time progresses that the gap starts widening. And the reason I say this is we've become a very digital economy, and there are even digital tools available now, like Aadhaar and UPI and all those things, where KYC is possible. You have DigiLocker with all your digitized documents straight from the source, digitally signed by the providing entity. But what has happened is regulations have stayed more or less static. Like for example, Aadhaar eKYC is 60,000 rupee limit. You can't give a more than 1 year loan. For sole proprietors, you need 3 documents. One is Aadhaar is okay. Then there are a list of 6 documents, of which only 1 is available digitally, and that too, it's like a download upload. You don't get it directly from the source, so we need to digitize those documents. But that said, like we're still trying to impose like regulations of the past on an environment that has changed. So what I was actually like suggesting when we have some of these discussions is, can we constitute a working group of people who have been in this space and rethink what KYC would look like given our current digital tools that are available. So I think that will help unblock like credit in a very, very large way, because identifying people, verifying and doing it from a regulatory compliant fashion will become very easy and very like fast to do. So I think that is the major one, but that, I mean, I have no idea how long that would take, but I think it would be a big unblocker of credit.
So it's very interesting to hear again the KYC issue. So a lot of people probably believe that KYC in India is solved, but that is not the case as long as it is credit, because credit requires a different kind of KYC. What we probably are able to solve KYC where is only is a POI and POA, which is coming from Aadhaar lockers, and that is for opening the account. But once you come to the other side of the table, which is asset, well, bankers are building their asset. I think there is a long way to go, if I summarize it well.
Yeah, that's right. Actually, there are digital tools. So one is, I mean, just naming one of the multiple that are out there. It's called LEI, I forget the full form, but it does do entity KYC. So like these solutions are out there. What like, so we are focusing on solving the sole proprietor problem, and like in the last 2.5 years, you've done this research in various little pockets that need to be solved for, and the solution is even sitting there. But the decision to tackle the largest by volume and the largest underserved first is what we've taken. And I think eventually we'll get there. These are not unsolvable problems. It's just you have to put together the resources and people to be able to go do that. But like honestly, when I started down this public goods journey like 2.5 years ago, I was quite skeptical about how it would turn out. I've never been more optimistic that we'll be able to do things. Okay, you can't like sort of measure them in the same time you would measure what you do in a for-profit corporate sector, because of just like it's like an ant trying to move a barrel, right? But sometimes it does happen.
Thanks, Rishi. So, coming back to Shalini, you mentioned that A has arrived, right? So, do you see that A's are now all set to disrupt the market, or do you still see that they are facing challenges, or they will continue to face challenges for which we need some solutions, or maybe we need some policy enablements around that?
So I would still say A is right, but yeah, there are challenges, and like any ecosystem, it will take time for it to operate at scale. So as of now, I didn't talk about numbers, but around 3.8 million customers have already used account aggregator to share, data, giving their consent for data shares. There are 114 entities who are using account aggregator. There are 27 entities who are providing information on account aggregator, and this includes all public sector banks and the large 10 private sector banks. More than 2,000 crore of loans, and lending card has given their number, so we can do the maths, but have been made through account aggregator. Manish said, the initial results have been encouraging. The lenders have reported lower drop-off rates, zero fraud rates, like higher profitability, quicker conversions, and all of that. But there are challenges in the sense that one, currently the system is not completely broad-based. The kind of financial information that should be made available for this ecosystem to reach out to each and every segment of the customer, that's still not there. So for example, today only singly held accounts and sole prop current accounts are available on account aggregator. There is obviously a need to have joint accounts and non sole corporate accounts also on AA. Second, we also need to kind of ensure, so one is the FIP broad basing, making it cross sectoral, getting insurance data on it, pension data on it. So work is underway. So all that should happen. We are hopeful that next 3 to 6 months there will be a lot of movement and progress we'll see on this front. The second big challenge which we'll need to then work on is that how do you get the health of the FIP technical health in terms of the API SLAs, making them adhere to SLAs, ensuring that the uptimes, the latency rate, the error rates are all within accepted kind of benchmark which has been agreed upon by the industry. Because as of now, the success rates on account aggregator is in the range of 35 to 40%, which means that out of 100 customers who start a journey to share data through account aggregator, only 40 finally end up sharing their data through account aggregator. So like the way you have SLAs in UPI, that's what we'll need in account aggregator also. The third important thing which we'll need to obviously work on is that, how do you ensure that this does not get limited only to the urban, the salaried, the digitally savvy customers? How do you take the benefits of account aggregator down to the bottom of the pyramid customers? So there again, what is encouraging is like what Rishi has explained from GEMSI and GSTSI, which is working on the MSME front. We're also looking at doing some pilots in the financial inclusion space, and that obviously means that you need to have a framework for assisted journeys, because that's a segment which will need business correspondents to complete the journey on their behalf. So that is another thing which we'll need to work on. And what is encouraging is that typically the way it happened in other journeys, you started with the top, the prime segments, and then you thought about how should we take it down to the other segments. here at least that thinking within the government, within the industry has already started. People are now looking at ideas which can be implemented and may, taken to the segments where actually there is a real need for financial, inclusion. So that I would say is the third. And the fourth, obviously, again, is a challenge currently, the mode of account aggregator. So as a citizen, it is a common good which is for my benefit, but even out of the 35, 3.5 million customers you've used it, I won't say that more than 1,000 would actually know what account aggregator is, because they are just doing it in the flow of the lender's journey, right? They see a module where there's something they've been asked to do, they do it, but they don't realize that they've actually created a handle or account like what they've done, they could do in payments, and could use this to transact data, share their data even going forward. So we really need to have some knowledge, some information education campaigns around customers to kind of educate them on account aggregators. So these are things, and I would think that once adoption increases, the industry will also start investing. The policymakers will also start investing more in the infrastructure, and that it becomes a cycle, right? So one initial good results will actually kind of push the ecosystem even further.
Thanks, Shalini. Actually, a quick question to Nikhil. Do you see that organizations are able to use data effectively, particularly considering the kind of segment that they want to deal with? Like, what has been your experience working with so many?
No, so they cannot use data effectively, and that's why we have a business, right? But what I can tell you is they understand manufacturing of financial products. They understand risk, right? And tech guys, we can build things out. We can build things for efficiency, for scale, but understanding the nuances that actually go into completely building a financial product, say like you need actuaries, you need mortality tables. If you're talking about something like insurance, you need to understand how a reinsurer thinks, because ultimately you need to take that book of say term policies to the reinsurer and de-risk yourself as an insurer. Equally, if you're say a distributor, you're thinking about all sorts of different parameters, and they have the experience and the expertise, and the vintage, and they've run through their books and cycled them a few times, so they bring all of that expertise. And what DPIs here have done is, the like I mentioned previously, the cost to acquire this data has drastically come down. So this data, maybe a subset of it was available previously, or maybe, and definitely no sort of longitudinal records were available. So even if Nikhil was sharing his say bank statement with a lender before taking a loan, as soon as I share my data, it was stale. So any sort of say early warning, or monitoring sort of use cases from say a credit perspective were not possible. And of course, through bureaus, the the data reporting time and the lag there was not feasible to sort of enable these kinds of use cases. So they understand all of this, that frameworks like the account aggregator, or even Oken, say on the distribution side, fundamentally changes this. It improves the turnaround time and the sort of data that they can have access to. So with all of this in mind, they do bring very creative ideas to the table, and they understand how to take this idea from a concept, a experiment, to scale, and what sort of early exhaust fumes, or validations that they want to look for from these experiments. So that's the approach we've taken with our partners, and so far it's it's working fairly well. So yeah.
So actually, first part of your answer really was depressing for me that they don't understand. But I think you elaborated well on that. It's not that bad. So coming to Manish, the last question for the panel, and this is little tricky in the sense, what is not working for digital credit, and it's more so why I'm asking this question, because we continue to see huge gap. So
Continue see.
continue to see huge gap in
Yeah, yeah.
what is really required versus what is available.
So I think there's a little bit that Shalini actually had covered, but building an ecosystem is a journey, and because the infrastructure is ready, the ecosystem is still evolving, and that is where the gap, you see the gap, and there are various sorts of gaps. But even if I fast forward to what we have today, there are things that sort of worry me and lenders when it comes to infra. So most of the account aggregator APIs have been built on top of existing core banking infra, right? The core banking infra, overall, if you really think about it, has been built for branches, and the mindset of 24/7 uptime is something that it was not actually conceptualized and initially built. So when you're building such large infra, if you look at account aggregator, or even Open, or even UPI for that matter, right? Now the dependency of, even if account aggregator is up, the dependency on various banks to be up and running, so that a customer who is on my asset, I'm able to serve well, becomes a problem. And then in that case, we have to sort of go to, if a specific bank is down, now how do I sort of do plan B, plan C? And it is like a traffic light, right? If you really look at the overall ecosystem, banks are up, banks are down, infra's up, infra's down. So I think one thing that really worries me from a gap perspective is, if as a industry, if we don't look at upping our game when it comes to 24/7 availability, I think overall the scale at which we'll grow will start to stress the different infrastructures, and that might sort of reduce the speed at which we are going. So I think this is a serious problem. We should all, as an industry, look at these things to figure out how do we get to that mindset, and how do we measure accountability if you're a part of the infrastructure. So I think that's one of the main things. The others are, Rushi actually covered the KYC, right? So there is a gap when it comes to actual connection of Aadhaar with the mobile phone of the customer. So overall, the coverage that we are overall getting is about 70 to 75%. The others, we have to rely on other means of KYC, right? So it actually breaks the digital journey. So the customers generally don't. So at least MSMEs, what we are really looking at is, their ability to sort of, pass the OTP, authenticate using Aadhaar. Overall success rate of that one, for various reasons. One of the reasons is their phone number has changed, or they don't have access to the phone number that they've originally linked their Aadhaar. Overall, our success rate is about 75%. So that is a problem. When you look at eNACH, right? Overall eNACH coverage, when it comes to, one is the coverage where the tail banks still are not supporting that. The other pieces are, the actual success rate is about 80 to 80%. So there are all of these, gaps, not just the credit, it is also KYC, eNACH, eSign, the expectation of digital infra to be up and running so that the entire journey of the customer is done in a good way is something that we have to. Digital stamping is also a problem. So those are the gaps that we actually, as an industry, really have to look at.
Thanks, Manish. I think there is a second reminder for us to wind up the session. But before I do that, probably we can take one question in case anyone has. I see some, probably like, if, yeah, I know that Anand is going to ask. Please go ahead.
Just, since you're talking about broad and large scale things, I wanted to think of the opposite thing. A lot of this digital infrastructure is really to solve the problem of trust, because you don't trust anybody, and therefore you have to create all this infrastructure. The reverse would be, we're not working towards technology infrastructure that enables, for example, all of this to happen in a village. That the devolution of technology doesn't seem to be happening, and an extreme centralization of technology seems to be happening, where you're saying that some guy sitting in Mumbai or in Bangalore or somewhere else is supposed to do this fancy algorithm that is going to tell me what this guy knows, which the neighbor will already know, and the village guy already knows, and still surviving as a money lender because of. So what should we do in order to extend technology down rather than suck technology up, so that all the decision making goes up and a very small number of people actually benefit from this?
So I'll take a stab at that. Look, the technology penetrating down is more in terms of the hardware and the software in terms of a smartphone. But are you going to, on a unit level, create these sort of things at a village level? The answers are resounding no, the cost will be too high, nobody will do it. Or the cost of the final product will be so high for the end customer that it probably won't get used. Look, there's always this fear of centralization and, Big Brother will start looking. But I think there's, again, and coming from the private sector and doing this now in the public sector, there's also a keen understanding of the people's fears. And so even, for example, account aggregator, the pipes are fully encrypted. They're only decrypted at the user's end. So it's not like the central body is seeing who's exchanging what with who. The only way, at least in my humble opinion, to do this at scale is to do it in this fashion. Because, look, if you look to the West, okay, now I'm going to beat up on in the country or whatever, but why has there been no change in payments? They're just two large networks that operate everything. And in India, it was too complex to have a similar sort of network and reach everyone, right? After 3 decades in the country, we probably had 35 million cards. And yes, that is part the lender's problem because they didn't want to extend credit as an issuer. But suddenly you built this public infra and everyone is using their phone to send payments. So yes, you're right in that some technology should be pushed down, but when you're trying to do it at scale, it's almost like tell a village, we'll build a road just for yourself, as opposed to connect 2 cities or connect a village to a city. Lenders are not going to go and set up infra separately on their own. So, I mean, it'll have to be some happy medium of the two, and the market will determine that, right? So we'll build the central infra, and the way, the best example I like to give of this, right? In 2005, we didn't have internet on our phones. By 2015, we were streaming movies on the way to work. But 2016, UPI, a few thousand transactions a month. Last month, 8 billion transactions a month, right? So I think we adopt it faster than we feel it whilst it's happening. But in hindsight, suddenly it's exploded, right? So, I mean, I don't see any other way unless anyone else.
So I think probably we have already run out of time. They are closing the partitions. Maybe they are giving us enough signal to get out. And before I do that, actually, I thank you, the panelists here, and for sparing your time and sharing your valuable thoughts. And just to summarize, and 1 or 2 lines, that I think we are on an interesting journey. This is a process, and it will take some time. I think during demonetization, the UPI has taken its roots, and what we see as of now is more like a history. Hopefully, in next 2-3 years, we will also say the same thing for open or democratization of credit. I know it's a arduous path. It's not as easy as payment because there is a money on stake. There is a possibility of delinquency. There is a possibility of losing the money. So we can't just do it the way we could have done it for payment. But still, I think pathways are clear and we are on right track, and hopefully we should surmount all the problems that we discuss. Thank you all for patiently listening. Thank you.
Thank you, panelists, for this really interesting session, and sorry for cutting it short. As a token of our appreciation, please accept our gifts and souvenirs as you exit the stage, after the photograph, that is. We will now take a short break, so grab your tea or coffee and join us back for our next session on 2 tracks, 1 mission, reaching the bottom of the pyramid in Hall B.